everyone. I'm Dan Basse, president of AgResource, joined by AgResource's grain analyst back from the EU, Ben Buckner, just to talk a little bit about world wheat here. Now, the wheat market hasn't been quite as exciting, at least in Chicago, U.S. futures, if you will, than, let's say, corn or soybeans. Well, Ben, that's largely because the crop is up and growing. It's been seeded already, and the northern plains for spring wheat is in pretty good shape.
Yeah, it's hard to identify a real problem with the North American wheat crop especially. Canada is now getting some rains, very timely rains. We're finding very good crop conditions, record yields in the southern U.S., the southern plains. So I think that the USDA's forecast is still a little bit too low, and so we're left with this huge abundance of domestic and North American wheat supply.
And really, let's take it around the world. If we look at the EU, they may have, 15 to 18 million metric tons more than last year because of their drought is no longer there?
That's right, yeah, and Russia too. I think it's been very, very hot and dry, but our best sources are still telling us USDA has got it right, or it might be a little too low yet. So adding this all together, the world wheat crop is going to be much, much bigger than it was last year.
So it's in a world with an abundance of wheat. The wheat market, at least for the moment, doesn't have a story. I guess we would need something from the U.S. trade negotiation with China or something like that to ignite wheat. But as we think about wheat, world wheat prices today in that last gas tender are already below where they were last year.
Yeah, that's right, by about $7 a metric ton. And especially, Europe and the Black Sea, they're competing with each other for this sort of first and second quarter export demand. So those markets are priced to sell, and that's what we're up against with our very expensive wheat at the moment.
So let's step back even a little further from that. The world has a record amount of wheat stocks. The world has a big wheat crop, and it's going to be probably a high-quality crop out of Russia because the heat and dryness will help it. That may flow to the Saudis and to the Algerians, which would then cut into that European business a little bit. If we stand back, though, South Korea bought wheat the other day at about $187, $88 a ton. It's always a little difficult to get freight, but we're in the area. U.S. Gulf corn is at $209 a ton. Boy, I would imagine feed wheat trade will be improving in the year ahead.
Yeah, absolutely. And if this is some kind of benchmark, Gulf corn is now above Russian milling wheat and is actually competing with like German and Baltic high protein wheat. So that seems to be a signal that corn, again, is very, very expensive in the U.S.
So if I look back in time, if I look at spot Kansas City futures versus spot Chicago corn futures, I think it's less than 30 days that contract has really been below what I would call even money. In other words, Kansas City wheat trading the same as Chicago corn. Today that spread's about 7 to 12 cents. If we go down there, Ben, will we stay at a discount in wheat for long, or what does this mean for the corn market?
It's hard to say. I think we have been at those really, really cheap premiums of wheat to corn for long periods of time. I think there is enough high-protein wheat in the U.S. that spread will stay depressed. The feed use will give it a boost to domestic consumption, but there's still no need to slow down demand in the U.S. or the world in terms of wheat, but we need to find it, rather. So I think it does stay depressed.
Crazy when you think about the wheat market. U.S. wheat plantings this year were at 110-year lows, and we probably need to plant less acres next year just to make sure we can manage our supplies. I'm Dan Basse, joined by Ben Buckner. Thank you. We'll be back again.